Hello traders, welcome back to GolgiFx, and this is your boy Golgi. So in this video, we'll be looking at gold trading strategy for scalpers. So gold has been consolidating for the past week, and before it breaks out, I want to give you one trading strategy that you can use to profit from this market as it starts to trend. You can also use this trading strategy to trade in other markets. So watch this video to the end so that you'll be able to understand the whole trading strategy and the tools that I use when trading. So if you are new to my channel, please like this video and subscribe to my channel to be notified on the coming video. Traders, let's get into the video. So gold is one commodity that has high volatility and has high demand. Since it has high demand, it makes this pair very easy for you to identify the overall direction of this market, as it tends to move in one direction for a very long time. So this strategy that I'm going to show you consists of 4 simple steps, and this strategy will help you to be able to identify the overall direction of gold, and also at the end I'll show you how to enter trades when trading gold. So the first thing you should do when trading gold is to look at the higher time frame. The higher time frame gives us a lot of information about the pair that we are trading, and with gold, since it's a commodity, you could see that currently we are in a bullish market as price tend to push to the upside. This gives us a lot of indication for us to continue buying gold. What are some of the key things that we should look at on a monthly time frame? One of them is to look at the current candlestick. If you look at the current candlestick, you can see that it's bullish, and also the previous candlestick is bullish. So it gives us an indication that for the coming months, the market will continue to push into the upside. And if you look at market structure here, you could see that price was pushing to the upside till we saw this retracement and later give us this clean highs, and now we are seeing a breakout of structure and price pushing to the upside. So now that we know this, we can go to lower time frame, but the most important thing we should mostly look at on the monthly time frame is to look at the current candlestick, which is currently bullish. So we know that the market is pushing to the upside. So let's go to the weekly time frame. We could see that on the weekly time frame, there are a lot of indecision candles forming here, but the overall market direction currently is in an uptrend. So what do? As you are seeing an indecision happening here, it's a clear sign the market wants to reverse the downside. But we don't straight away go in and sell, because we have a monthly time frame which is giving us an idea that the overall trend is currently pushing to upside. So we rely on price action, which can help us for us to know if truly the market is going to reverse or not. So let's go to a daily time frame. If you go to a daily time frame and watch market structure, you could identify the market structure very clear, and also you can identify our levels on the chart. You could see that we are having a clean high around this level. When price got to this level, came back to rate test, and as it pushed it down, it is rate testing the same level again. So what do? So we know that on the monthly time frame, we are looking for buys. On the weekly time frame, we are seeing a lot of indecision happening there. So the daily time frame is where we wait patiently. So we wait patiently for price to break out around this level. If price break up, then we know that our monthly direction is still in play. Then we try to trade in that direction. If the market also breaks the downside, then we'll be waiting patiently for a retest, and then you could sell from this point when market retests our previous low. So this is a simple way we can use to trade on daily time frame. We could add confirmation like the RSI. For me, I use the RSI, which has a period of 6. And if you look at the RSI divergence, you could see that market is diverging to the downside. So you could see as price pushing to the upside, the indicator also pushing to the downside, which is also confirming our idea of either we want to sell or to buy. So if you use the idea of price action divergence from this, you could see that it's high probability that the market could push the downside. But we are not going to trade. We are going to wait patiently for price to do that before we trade. So now that we have this, we can go to our 15 minutes or 30 minutes time frame and be looking for our trade when the market gives us what we are expecting to do. What we do is we wait patiently for price to break up, and we wait for a retest, like something like this. Wait for price to push up, a retest, and then we could look for our trace here. And if what our divergence is telling us, we wait patiently for price to push down, we wait for price to retest, then we could be looking for sell opportunities. There's one thing that most traders do, that is focusing on the lower time frame. You could see that when we did a top-down analysis, it really helped us to identify and had big picture of the market. So now we understand where the market is currently going and where a high probability of going. So focusing on the high time frame really plays a very important role when trading. Don't only focus on the lower time frame, but rather focus on the high time frame too. Also, when trading gold, you should be looking for brokers that have low spread like XM Markets, which has low spread whereby you can use to trade. So you can check my description box below and to get that broker to register and trade with them. So trader, this is a simple trading strategy that you can use, and I hope this will help you for you to improve your trading. So that's all for this video. I hope you like it. Please give me a thumb up if you like this video and subscribe to my channel.